Let me now welcome on board Devina Mehra and ask her about, of course, reflecting on 2025 and how the year ahead is going to be like. Devina, hi, great to have you today on the show. Thank you so much for your time. And Devina, just taking a leaf out of, what you were talking about, the fact that Indian markets have been at, the bottom 10% of the global market performance. And the question on everyone's mind is, that FOMO feeling. Wish we invested more in gold, in silver, or got a little bit more exposure to perhaps US markets.
Yes, and a very happy new year to you and to your viewers a day in advance. So 2025 has not been a great year, I think, for most portfolios. That's not really adequately captured by the indexes because I saw just a few days back that even though let's say the NSE 500, BSE 500 were up for the year, the median stock was still down. And many stocks were down, a large percentage were down more than 20%. I think 75% were down more than 10%. So it's not been a very pretty picture. And as I have posted that it causes some FOMO but I can tell your viewers that FOMO is the wrong way to invest, and driving, looking only at the rear view window and looking at what has gone past is not how you make the decision of where to go next. And also I nowadays see that most talking heads on television talking about the risks in the market. So it definitely the sentiment is still not upbeat. Most investors' sentiment is not upbeat. They are talking about, what did we get being in the Indian market. So now academic studies show that when the sentiment is this weak is when the next period returns are above normal, when there is over optimism and buoyancy, as was the case in the first 8 months of 2024, when everybody used to come and tell me that why do you say that focus on risk first and we want to take high risk. We are happy with 30% compounding. That was the kind of talk. That's when you need to be wary. So right now you should be, to the extent of your equity allocation, my recommendation is that be invested. However, and this is a very important caveat, that doesn't mean that you remain invested in where you are invested. So let us say you bought a lot of the small and micro caps that had this mad run in 2024. Doesn't mean that those very stocks will come back. So take stock now and look at where you should be invested and be invested there. I mean, you have to harden your heart and get rid of whatever doesn't make sense in your portfolio. So let that be your New Year resolution, that you will go beyond the first 2 pages of your DP statement and get rid of everything you don't really want to even look at.
Got the emotion. Okay. But Devina, that is the whole thing, right? I mean, do you look at bottom-up stories? Do you look at ignored, unloved spaces? Do you now increase allocation to mid and small caps selectively? Do you ease off from gold and silver? Too many questions there. How do you allocate for 2026?
First of all, gold and silver should be part of your asset allocation, but should not be a very big part. So they should not be, let us say, 30 or 40% of your asset allocation. We do have gold and silver in our multi-asset products, both in India and global, but they are normally single-digit allocations. And gold in particular has had a spectacular run, and history shows that gold is more volatile than equities. So while people think it is some safe haven, at least in dollar terms, if you look at the long-term history of gold, it has been much more volatile than equities. The high it made in 1980 was not crossed for 27 years. And the next high, again, it fell 40%. So 1980 high, nearly 2 decades later, it was still down 60%. So it's just the rupee chart of gold looks good because it is the rupee depreciation chart. And therefore, our grandmothers were not wrong in buying gold, but now you don't have to play the global currencies or the global markets only through gold. Now you can invest globally. So you should invest globally. And to that, the caveat is that the US is not the globe. So don't think that if you buy the half a dozen stocks you heard of, or even the NASDAQ or S&P, that is good enough as the global diversification.
Hi, Devina. Harsha, this is, two quick questions. One is you spoke about how your DP statement You need to go beyond page 2. Should you have a DP statement beyond page 2? That's my first question.
Yeah, I mean, that's what I'm saying, but most people do. I mean, there are
That's true.
things that you don't want to look at. It is fine to have 30, 40, or even like our PMS is called India Super 50. We do have 50 plus stocks there. But they should be carefully chosen stocks. In most DP statements, the other pages are just the debris of old bull markets and IPO excesses that you don't want to look at.
That's true. Devina, with regard to the index itself, Nifty has done fairly well for itself. When you're zooming out, we've still delivered a 1 year return, and this is based on total return index of 10% or near 10%, which is fairly decent for the year that we've had, right? But the small cap index in particular has done -7 in that context, and therefore the kind of alpha that the large cap index over the small cap index has done is extremely large. Do you believe it's going to be a year where small caps make a bit of a comeback? And if so, what sectors, pockets, spaces are you liking within that small cap basket?
Small caps are always a company specific call. That it is
Sure.
never a category call. And as far as the category is concerned, and this is not something I'm saying today, I said it throughout. I kind of cried myself hoarse during 2024, saying, look at the history of the small cap index even. So the small cap index, most people forget, in 2008-9 fell nearly 80%, 78% to be exact. To cross that high, it took 8 years. And that was a theoretical crossing because that index changes 20% every year. So 8 years later, the stocks were completely different. And then again, you had this mad bull run in 2018, 19, and then again a nearly two-thirds fall. So that's the nature of the beast. It is not an aberration that the small cap index has fallen for a year and should therefore bounce back. That's not how it works. And as I said, this is something I've been saying for a very long time. As far as the Nifty is concerned, I remember my book came out end of January. So February, I did a few podcasts, and in all of them, I'm saying the same thing, that if you were waiting for a correction to invest, have you invested? The index, I think Nifty was 22,000 then. So I mean, the point is that, as I said, sentiment is a contra-indicator. So it is when you are feeling down and anxious and fearful is when you should remain invested. When the returns seem to be there for the taking is when you should pause and be cautious.
Yeah, indeed. But Devina, I mean, the question is also within the India equity pool, where is it that you hunt? If you were to take fresh positions, betting on an earnings recovery, what do you buy then?
So, I mean, it is, see, what you hold and what you buy should be exactly the same thing. So, there is no reason to hold something that you will not buy today. So, let me tell you, in our PMS where we are overweight, so now for almost 2 years, we've been overweight auto components and pharma healthcare. So this year, the first category did well, the second one took a pause, but we still remain positive on it. This year, where we have over time become overweight is FMCG, which is where you will see some impact of the lower inflation and the consumption growth picking up, and also the fact that petrochemical prices are down, so some benefit on the margin front also. Other than that, it has been mostly stock picks. In banking, while we are not overweight, we do hold more than what we usually do. And first half of the year, it was mostly adding PSU banks. The second half, we've added a bit of the private banks also. Though as I said, we are not overweight that sector. So others are like chemicals, capital goods, etc. More stock picks. If you are looking at a dark horse kind of sector, probably IT would be my recommendation. Just as banking at the beginning of this year, if you looked back 5 years, it had underperformed in 4 out of the 5 years, barring 2022. Every year, banking had underperformed and it had a comeback this year. I think IT might do something similar. We have shifted a bit from large cap to mid cap, and we would be slightly overweight, not hugely overweight IT.
Let me ask you, banks. You've got a larger chunk of your portfolio than you typically have. You mentioned that. Also, what you've suggested is you're not overweight. Explain this dichotomy or thesis, if I can call it that.
It is simply because I'm a nervous investor in banks and lenders.
Sure.
because by the way the industry works, and I've been a banker, is that there is the possibility of negative surprises, whether from the credit book or occasionally from the trade book also, is higher than the possibility of positive surprises. That's the way it is structured, and it is a highly leveraged industry. And sitting outside, you cannot make a call on where the next negative surprise will come from, because you don't know the details of the credit book. So that's the structural reason why I am a nervous investor in banks, because that's the nature of banking, and everybody remembers that. And one of our most memorable call has been HDFC Bank a year after its IPO in 1996, and everyone remembers that HDFC Bank and Kotak Mahindra, if you'd invested, this is how much you would have compounded. But there were several other banks who got licenses around the same time and who ran into major trouble. Global Trust Bank, Times Guarantee Bank, then it became Times Bank, I think, and then Centurion Bank, Yes Bank went through major crisis. Half a dozen PSU banks have gone into trouble and have had to be merged. So that's the nature of banking, that it is a kind of difficult sector, especially for an analyst sitting outside. So you're really betting that the management is doing the right thing, which sometimes doesn't hold true.
Oh, yeah, absolutely. Things you realize only in retrospect. But Devina, so great having you today on the show, and wish you a very happy, peaceful, and prosperous new year ahead.
Same to you, and thank you for having me.
Thank you.